So now I want to refresh you where when you invest in CNF stock, what are you actually buying? Because some of you have get started, then when the stock market don't go in your favor, your confidence get wavered. And wow, why like that? Why so long one? 5 minutes later, check again. Wow, I haven't moved up. After that, 1 hour later, I haven't moved up. Okay, so there's a lot of expectation and reality mismatch. So you must correct it. So Louis just now mentioned during his course, he talked about the life cycle of the company, right? So this is also a very simple life cycle of a company. So a company in the first few years is called a startup, correct? Startup. Then after that, you call the growth phase, right? So you continue to grow. Then after that, mature. Then die. Okay, not all companies die, some can last very long. So if you ask yourself, where would CNF lie? If you buy a CNF stock, right, which stage of the life cycle of the company is most likely a CNF stock? Some say mature. I heard growth. Anymore? Got decline or decline also, yes. Okay. Anymore? Mature, so most people say mature. Okay, I'll uncover later. But we'll go through each phase, what's the characteristic, and what kind of investor actually invest in each phase. Okay? So, startup phase, right? You know a lot of tech company, right? Now very in thing, right? Wow, then after they become Facebook, then become billionaire, right? Wow, how many people are? Only 1 or 2 can do that, okay? But a lot of all these companies will fail. Confirm one. After 1-2 years, run out of money, go bankrupt already. And usually newspaper don't report these people. Newspaper only report those who win. So you suddenly think that tech is very good. Everybody want to rush into tech. But actually the failure rate is damn high. Okay? So a lot of RIP, the cemetery very big one for the tech companies. And usually who invests? Is your angel investors and your venture capitalists. These are usually successful businessmen in their own rights, and they have used their experience to help this company. They don't just pump money, right? They pump in experience, they pump in context, very important, backing. So these are the game by these people. Do you think we are the ones doing this? No. So don't try. Unless you really know what you're doing. Okay, don't try. So startup, better don't play. But of course, if you can pick something out, you will be tongue ready. Just one enough already. Okay? Just one Facebook enough, right? You'll be the richest man in Singapore already. Okay? So if you don't invest here, right? Some people invest in growth, right? Wow, this is the next Google. This is the next Coca-Cola. Very sexy story. Very, very sexy story. Very small, can grow very, very big one. And they pass up the startup phase. But does it mean the failure rate is very low? No, right? Growth phase failure rate also quite high, but smaller. Cemetery is smaller than this one. Okay? And what's very typical about this growth phase is that PE very high. Because you're paying a lot for future earnings. Current earnings is very low. So you're expecting a higher returns in the future. So you're willing to pay a very high price. And confirm PB very high also. Alright? And you're paying a lot for growth, which is uncertain, which some of them may end up in the cemetery. Okay, so but again, growth stock also have high potential of returns. All right, and usually who invests here, right? The other thing is on the IPO side, right? Is most stock, if they want to go listed, right, they will list during their growth phase, because of better potential, so they will list in the growth phase, and the world is not fair. The high net worth people will get pre-IPO price. The retail people will pay the IPO price. Then who sell to the IPO? People who buy is the high net worth people. Okay, so usually they get 10%, 15% discount off IPO. So they confirm guarantee offload. They earn 10-15% already. Sorry, the world is not fair. Too bad. Your parents never give you enough money. Then you retail investor buy IPO, and then thereafter you buy all those growth stocks. So growth investing, they talk about growing earnings revenue is where you buy the growth stage of a company. Okay, so come to matured. So these are your blue chip, your dividend stocks. Because only when they are matured, then they can start giving you dividend. When they are in growth, they need all the money to expand their business. It's very unlikely to pay you dividend. So growth stock, probably you give them 5 years, 10 years, they don't even give you a single cent of dividend. So when you buy a dividend stock, most likely you'll end up in the mature state, your blue chip state. Okay, and this is also the state where you can find undervalued stocks, because these are the stocks that are forgotten. They are no longer sexy. They grow but they didn't grow big enough then they stop already because the market is saturated already. Very mature industry as well. So this is where your CNF stocks are. This is where the undervalued stocks are, because they are forgotten. Because all the attention go to blue chip dividend stock or the growth stocks. So most people focus on these stocks. Very few people look at the smaller companies who are matured already. Okay? So CNF is right smack at that sweet spot. The decline one, right? You can have the lost blue chip status, like your NOL, right? From here become here. Okay? Then there are also cheap stocks, right? Cheap become cheaper, right? Undervalued stock become undervalued. So this is the key thing about getting into the. This is the risk. This is the risk when you invest in the mature state, right? Is that there is a very thin separation, right, between the mature state and the decline state, and it's very hard to tell which is which. All right. So this is something that we have to be careful of. So that's why we added the POF score to increase the possibility that it is not declining. At least it's maintaining its asset value and stay in the mature zone. So at least now you have a big picture, right? You know why we are doing certain things. Okay? Because these are the stocks that most people pay attention to, and you know that if a lot of people are chasing these stocks, they are not going to be cheap. Right? They are not going to be cheap. And you hope that you really get this right, which the probability is very low. Okay, so this is the frame.